Hello and welcome to BQ Prime. This is all about the India growth story that's been doing the headlines over the last week or so. And everyone from a brokerage to economists to even market participants have upgraded or revised the target for GDP for India in the coming year by at least 50 basis points. Now, there is a sense of optimism, there is euphoria. BQ Prime has been bringing voices from experts from across the field. We continue to do so. Today, we are going to a very important voice from the global arena. It's from the Moody's Analytics, and we have with us and we have with us Steve Cochrane, Chief Economist for APAC at Moody's, who is joining me from Singapore. Steve, thanks for joining us. Welcome to BQ Prime.
Thank you.
Okay, my first question. At 7.2% GDP estimate, India is the story that's being talked about. Your first thoughts on the latest numbers and how would you view it?
The latest numbers were quite strong, stronger than I think most of us expected. When you look year to year at the front with the data that came out for the first calendar quarter, 6.1% growth over the year, very much above what it was the prior quarter when it was below 5%. It also puts India as the strongest growing of the larger economies in the Asia Pacific region. So India is in a really, really good position right now. One of the factors that helps keep the Indian economy going is it isn't quite as exposed to export trade as other parts of Asia, and that's a weak part of the whole global economy, so that doesn't hit India so much. But another positive factor is that when you look at the gross value added, the GDP as you spread it across industries, it's the growth rate has been pretty broad across all industries, so it's not one specific industry or another that is driving growth. I would say if there are any differences, the private consumption by households has contributed a little less to the economic growth at the moment, and government spending is a relatively large share of economic growth at the moment.
Right. So based on these numbers, both economists and brokerages have gone ahead and they have upgraded India's growth outlook. Some of them have upgraded by almost 50 basis points, and the most bullish outlook is something like 6.7% for the coming year. How optimistic are you? Do you think that it's sustainable? Will you upgrade India's growth rate?
Well, I've always been a little bit optimistic about the Indian economy. So my upgrade actually is pretty small, but it's still a fairly optimistic a forecast for India. I do think India will continue through the course of this year into next year to be one of the leaders of economic growth. And so there's good reason to be very, very optimistic about the economy.
So how much will they upgrade by? Will you take it to 6.3, 6.4? Can you put a number to this?
So actually 6.4, 6.5, that is where our forecast is right now. So that's pretty strong for India.
Yeah. In fact, that's a very good number coming on top of 7.2, on a strong base. Now, my next question is, you talked about how evenly the growth has been spread across different sectors. The biggest worry for us has been the recession fears triggered by the Fed rate hike and the developments across different economies in the global. Now, that fear is receding. So is that risk something that India need not worry in this year?
Well, we don't want to take our eyes off of the North American economy nor the European economy because they are so important as trading partners for India. But the risk of recession does seem to be easing both in Europe and in North America. In North America, the labor market is very strong. Consumer spending is still very strong. There's a significant amount of pent-up savings that can be spent. Wages are rising. So the economy looks fairly strong. But if the Fed decides to raise rates more than we might expect, that actually could put the brakes on the economy. So it's, our baseline forecast for North America is for it not to fall into recession, but the probability of falling into recession, I mean, it's almost 50-50, really. Similar in Europe, the weakest economies seem to be Germany and the United Kingdom. Both of them seem to be skirting recession at the moment. Germany perhaps has the biggest risk because the manufacturing side of the economy in Germany is somewhat weak, but it still doesn't seem to have the broad economic downturn that would define a recession in Germany. So far so good. We continue to watch those economies, but they're not adding to the risk for India. I think that may be the best way to express it.
Right. Okay, now let me shift focus to the most important aspect when it comes to viewing India's rating, which obviously you will not be talking about because this is not about a rating discussion. The core issue always has been fiscal deficit. Now we are looking at something like 5.9% in the coming year, and obviously the government is doing heavy lifting. How do you view our fiscal deficit, the debt situation here in India?
Well, I think India is facing a situation where it will have to consolidate fiscal policy a bit to bring down that annual deficit. Now, India is in good company. So many emerging market economies are in the same place because spending has been so high for two reasons. One, just to get the economy through the pandemic, and then to provide various support mechanisms during the period of high inflation. So the deficit has gone up, and I think it will be a high priority for government to begin bringing that down. I think the government can follow a gradual pace on this, only in that the overall debt to GDP ratio has already been coming down from its peak during the pandemic. So that's a good sign. But the annual deficit is still high. And so the key factor will be either reducing spending on subsidies or trying to shift investment from government-led investment to private investment or foreign investment.
Yeah, I think that's the challenge for us. Shifting from government-led investment to private-led investment is going to be a challenge, isn't it, in the coming years?
Oh, absolutely. It will be a challenge. It does represent an opportunity. Firms around the world are now, of course, looking to minimize their concentration risk in China, and are looking for other locations to expand supply chain locations or production of intermediate inputs. And so India, along with many countries, has a great opportunity right now to try to attract some of that investment that is looking for a home. But having said that, it's not going to be easy because there is a lot of competition. Southeast Asia already is there in terms of the eyes of investors. And then other places around the world, Mexico, for example, being right next to the United States, or North Africa or Eastern Europe feeding providing supply chain locations for the European manufacturing economy. So there's a lot of competition out there. But there's great opportunity for India to attract some of that investment and use that to expand the economy and expand opportunities in India.
Right. So since you're talking about investment opportunities, let me also shift focus to the export opportunities here. Do you think that India is losing its edge on the export front because of the global developments? One, the markets have been kind of shrinking, and there has also been a currency competitive edge that we may be losing.
Well, it is tough competition to gain an additional share in that foreign investment. There are a lot of reasons why investors have been hesitant to move into the Indian economy. One is the situation or the quality of infrastructure in India, which is being upgraded but needs a lot further upgrade going forward. There are a lot of complex bureaucratic rules in India which have to be understood to be able to maneuver through all the different rules and regulations that can often vary state by state in India as well. So a number of these factors do cause investors to look very carefully at India. Also, the labor force. I mean, there's a very talented labor force in India, but there's a very unequal distribution of talent in the labor force. And so, in a sense, there's a little bit of a limitation because there is a fair amount of the labor force that does not have a high skill set or that needs training to be able to work efficiently and effectively in a modern situation.
Right. So let me shift focus to spending, fiscal deficit, and inflation. So if the government continues to spend and keep the fiscal deficit at more or less the same level and give a big push to the economy, do you think that inflation will continue to be a problem? Because inflation has been managed around 6% to a great extent, which given India's growth conditions is good. But inflation, though of course the RBI has hit the pause button and most likely in the next couple of days to do that as well. So there may not be any immediate pressure. Do you think that going forward in our pursuit for growth, higher growth, will inflation crop up again?
Well, as you mentioned, inflation has come down quite a bit. The latest read was 4.7%. It came down from a peak earlier in the year of 6.5%. So that's a pretty quick improvement in the inflation situation and very close to the RBI's target that is something under 4%. So that is very good news for the Indian economy. Now, a lot of the reason for that the disinflation that we've experienced over the last 5-6 months has been due to external factors, simply prices of commodities coming in a little bit. Also, the ability of India to purchase crude oil from Russia at a discounted price has helped a lot in terms of keeping basic commodity prices down in India. And the flow of edible oils and such from Ukraine has improved as well. So the external side of the economy, the external drivers of inflation have come in. That's a good thing, but that may not continue. The prices are already down, and it probably won't continue to drive inflation lower. So it will depend more on domestic spending, and domestic spending both in terms of consumer spending, but also in terms of government spending. And this is where the government does have to be careful. That if the government does continue to spend at a rate that keeps the deficit high, that doesn't begin to bring that deficit in, that could be a factor, if not to raise inflation again, at least to make it difficult to bring inflation down any further than where it is now. So I think some caution has to be in order for fiscal policy.
Right. Yeah, I think that's also the objective of the finance ministry. They've set a target of 4.5% by 2025-26. So there is a glide path that has been worked out to bring the fiscal deficit down. My next point is about currency. So where do you think the dollar is headed? What kind of currency issues that the RBI will manage and the economy will manage? Because that's going to be critical for our exports as well. How do you view this important factor affecting our export growth?
Well, I think we may see a little bit of stability in terms of foreign exchange rates in the coming year or so. And that is simply because the monetary policy is likely to be held steady both in India and in the US. Our expectation is that the Federal Reserve is at its peak rate right now for the federal funds rate at between 5 and 5.25%. And the RBI is probably at its peak rate at the moment as well. So the spreads aren't going to change too much in terms of differences of interest rates across the two countries. And similarly, with other countries where central banks are approaching their peak rate as well. So my guess is that as long as the current account balance can hold steady, we'll likely see some stability in foreign exchange rate. And so this, of course, then brings back the issue of exports, that India needs to do everything it can to promote its export base and keep those exports flowing.
Okay, so it's good news on the currency front. Now, let me go back and ask you one basic question. What are the risks to growth in the coming year, and how easy or difficult is it to manage those risks in your view?
Well, there's a couple of risks in the economy right now. One is that the global economy, as we mentioned, we talked about things stabilizing in Europe and North America, but there's no telling when the economies are actually going to accelerate, which means no telling when demand for exports may actually pick up. So one of the key factors in terms of driving the Indian economy going forward is going to be improving productivity, to be able to produce more with less labor, with less capital, to be able to compete in an export market that may be a little bit difficult over the next year or 2 years. So that productivity growth is going to be important in terms of keeping government investment very much targeted towards productivity enhancing activities like, say, infrastructure or improved education and such, and moving away from factors which can take away from potential growth, and that would be, in a sense, some of the subsidies right now on fuel and food and so forth. In other words, government spending has to be really directed towards those factors that improve productivity growth and economic performance going forward.
Okay, one important factor outside all these 5 or 6 boxes that you have almost ticked, most of them, is the political developments that we are going to see towards the end of this current financial year, and sometime a year down the line when the general elections are going to come. How would you factor the political developments that are going to come up? Have you done an analysis? Does that fit into your analysis?
Well, I think the key factor here, I think, is that when elections come up, that one, they need to be free and fair elections and very transparent. I have no reason to believe that they would not be, but that, of course, is an important factor in terms of developing investor confidence in any economy. And then the other important thing too is that there is some potential, as one approaches an election season, for an economy to become a little bit imbalanced in terms of, well, the government may end up spending more over the months leading up to the election simply to generate support by the electorate, and then perhaps after the election having to pull back more simply to keep the deficit where the target is. So it means that the economy might actually enter some period of volatility if indeed the election becomes a factor in terms of fiscal spending. This does happen a lot in countries around the world. It's a temporary phenomenon, but it does happen, and again, it can lead to some erosion of investor confidence in the economy.
Okay, I think that's something we will wait and watch. One last question, which is medium to long term in nature. What kind of structural changes that you're seeing as far as India is concerned? Because structural changes which can help make the big shift that we have been looking at.
Yeah, well, a couple of things. One is that India tends to rely a lot on small and medium-sized enterprises to grow the economy. In a way, that's a very good thing, because small enterprises support small cities, rural areas, often the less well educated. But it also does limit the potential for large-scale growth. And so capital credit has to be made available to allow industry companies to grow, to gain that kind of scale in which they can be competitive globally. Second, I mentioned education, and I think education will be absolutely critical in the medium to long term. In the near term, there's not much one can do, but over the medium to long term, the expansion of high quality education services across all of India, urban, rural areas, I think is absolutely critical to upskill the entire workforce for the economy. And finally, and somewhat related, improving public health care around India, simply to improve healthcare outcomes and make a healthier and more productive labor force as well.
Absolutely. I think all those three areas that you have pointed out are very, very important for us to make the big shift. And right now there is a heat wave, but there is also this wave of optimism sweeping India. And Steve, thank you so much for joining us and giving us those valuable insights on where to focus and a very realistic assessment of our economy.
Thank you very much.